All right, welcome to Founder Fridays. This is I don't know what edition this would be. This would be, I don't know, edition 1520. Like we've been rolling since we done put Founder Friday into the weekly rotation. And you guys have been responding, man. So I'm really excited about what Founder Fridays has turned into. What is the community that we've been able to build here. And just like true form, we got another winner lined up for you today. This one is going to be real good. Here at Founder Fridays, we talk about giving access to knowledge, giving access to network, and giving access to capital. We know that as entrepreneurs, capital is a big hurdle that we all got to jump through, especially at the early stages, especially Black and brown entrepreneurs, especially having access to ways to fund their startups, fund their businesses, and things like that. So we got a really interesting and exciting guest to join us today. I'm gonna have Keontae introduce her in a second, but I'm really excited about what she's going to be sharing. We're going to be talking about ways to fund your startup. She's got a particular product and a particular angle that she's going to talk to us about funding your startup, but it's a broader conversation about just making these resources available to everybody and all who connect to Founder Fridays. So tell one, tell all. This is the network you need to be a part of so that you can get the knowledge, get the network, and get the access to capital that you need to grow and start and launch your business. All right. So Founder Fridays in full effect. I'm going to pass it over to my partner. We talked about the illustrious Keontae. We're going to pass it over to him. I'm going to let him introduce our guest, and then we're going to hop right into it. As you all know, we like to keep y'all like an hour. We want this to be hard-hitting, action-packed 60 minutes that you can take into the weekend, have you something that you can work on for your business tomorrow. We like to give you action steps. This ain't just theory. We want to give you stuff that you can do right now so that you can start taking your business to the next level. All right, Keontae.
Got what's going on, everybody? So, welcome to Founder Fridays. First and foremost, we got a big stepper with us today, Big Bison. Shout out to Howard University.
Shout out to Howard.
HU in the building. You know,
HU.
we got Lydnsae Peele coming before us today. Got a lot of accolades, right? She's a finance coach. She's an international speaker. We got to hear more about that. Where you been speaking at? We got to know what the countries. Come on, we got to hear it. But she got a lot of accolades. She's a Black wealth advocate. And of course, as we had discussed, HU grad. You know, she has a BA in broadcast journalism and also her MBA from UMGC, and also a certified women's entrepreneur from Cornell. That's a huge deal. Some big accolades there. And so, on top of that, she's also the Kiva US Entrepreneurial Ecosystem Manager. So, she's bringing some gems for you today. On top of that, a lot of this month, we've been talking about different routes to funding your business outside of just VC and accelerators. We had Isaac Hayes earlier this month talking about the art of crowdfunding. And so now we are here today with Lydnsae Peele, and she has some awesome feedback on microloans for your startup. A lot of people may not consider microloans as an alternative to funding and so forth. So she has some awesome gems for us today. And so please show her some love as we welcome Lydnsae Peele.
Lydnsae.
I felt like that was a moment for a drum roll.
Yeah.
There we go. Let me bring it back real quick. Lydnsae Peele.
Yeah.
What's up? Hello. I feel like I can say what's up because I feel like I'm home with my HBCU family. I'm super happy to be here. Thank you all so much for having me. Shout out to you all and the amazing work that you are doing for our HBCUpreneurs. It is super important. I wish that I had organizations like you all that were around when I was in school. Maybe I would have took a bite out of the entrepreneurial pie a long time ago, but so grateful for you all. My name is Lydnsae Peele, and I do serve as the Entrepreneurial Ecosystem Manager for Kiva US. I support a portfolio of almost 40 hubs and our 45 capital access managers who operate our program out of their local organization. I'm super excited to give you all some great information about Kiva, how we can support you, and definitely being that first step on the capital access ladder. A little bit about my background. I graduated from the only HU, Howard University, back in 2016 with my Bachelor of Arts in Broadcast Journalism, and my minor was Community Development. I started my financial background while I was a student at Howard. I started at Wells Fargo as a part-time teller in between my junior and senior year. And it really, really, really allowed me the opportunity to combine my gift of speaking. I'm naturally a speaker. I've been talking since I was a little girl. I was reading the announcements, for the whole school when I was in 8th grade. Also with my love for financial literacy, and especially for and in marginalized communities. I come from a very, very small town in North Carolina, one of the poorest counties in North Carolina. So I always say I come from very humble beginnings, but I grew up on the back of a small business. My father's a plumber and my mom has been running that business for over 20 years. So I literally would not be here had it not been for my parents investing in their business and investing in me as their child. So my entrepreneurship, anything small business, finance, real estate is what I'm extremely passionate about, because we absolutely need this information, and it needs to start earlier, honestly, right? We need to be teaching this in elementary school, learning the difference between wants and needs, and really creating curriculum for middle and high school students, because unfortunately, especially in our communities, we are learning by example, right? We try something, we mess it up, and then that's when we learn the lessons. But in this space, it allows us to be extremely proactive. I grew in my banking career from a teller to a branch manager. Before I ended my corporate career in banking, I was managing 2 locations here in Baltimore City, right here on the harbor. And it really provided me a great opportunity to really learn the back end of underwriting loans. At the end of 2020, I transitioned from banking into full-time entrepreneurship myself. Outside of my work at Kiva, I manage a financial consulting firm specifically for BIPOC entrepreneurs, and we focus on both personal and business finance with a huge, huge, huge focus on access to capital. So I'm super excited to get into Kiva today. Before I jump into what Kiva is, I like to share my journey with Kiva because it's so important. I think that it lays the foundation for why I believe in Kiva so much. So back in 2018, while I was a business banking specialist, I actually met our capital access manager right here in Baltimore at a networking event, and I became a partner. I was a fan of Kiva and the work that we do and the overall mission of the organization. And I would start sending my clients to Kiva who would get declined for traditional capital through the bank. So I was able to create that relationship. Later on, transitioning out of banking, even in my company, I was able to be a contractor. So I used to support Kiva borrowers who were delinquent, who had trouble paying back their loans, to really kind of understand what was going on in their business, what was going on in their family dynamics, to help some of them get back on track and paying back their loans. And earlier this year, I was able to fully fund my own Kiva loan. So I know from firsthand experience what that looks like, working with Kiva, being able to fund your loan. And I'm super excited to bring you all some incredible information. Let me know in the chat if you're ready by dropping some money signs. I know they have all types of reactions nowadays. And then I also want you all to let me know if this is your first time hearing about Kiva, or if you are already familiar with Kiva and what we do. A big part of our mission is really being able to enable communities to expand capital across financially excluded entrepreneurs, those entrepreneurs who are credit invisible, those entrepreneurs who just honestly did not have financial literacy growing up. We know that these conversations were not normal, right, at our kitchen table. We know a lot of times in our communities, this is not what we were talking about. This is not the topic of conversation. But guess what? We are changing the narrative today. Shout out to Venture for Them for just creating this platform. So what is Kiva? Kiva was established back in 2005 as the world's first personal microlending website. Ultimately, we enable everyday people to pool small lending contributions to provide financial access to entrepreneurs across the globe. So when we say everyday people like you and myself, you can be a lender. I am a lender. Anyone else in this space, you can lend to anyone around you on our platform and contribute to the success of their business. Since our beginning, Kiva has grown to enable over 2 million lenders worldwide to lend a combined $1.5 billion in over 77 countries around the world. So we're super excited. We are an international microlending organization. Now, I specifically work within the Kiva US platform, and within Kiva US, in which I'll get into that in a moment, we are the only direct Kiva to borrower lending platform within our whole Kiva ecosystem. So our international partners, they actually work through other microlending lending organizations and allow them to lend from Kiva through those organizations. Specifically, our global impact. We have impacted over 4 million borrowers in over 77 countries with over 2 million lenders. We have over 450 volunteers who help us to do incredible work every single day. Every 7 seconds, right, between every loan, there is funding happening. We have a phenomenal group of employees, which we call Kivans. And when I say this is probably the best job that I've ever had, I genuinely mean that. I love my team. Everybody here is very mission oriented, and we're truly about what we say that we're about. Specifically within the Kiva US program, though, we started in 2011, and specifically within the United States and in Puerto Rico, we have crowdfunded about 50 million loans. We've provided funding in over 1,500 cities, and we've supported over 8,000 US borrowers through our platform. But guess what? We're just getting started. You know, within the last 12 years, we've been able to do some incredible work. And with me now on the team and so many other phenomenal people, we're looking to double and triple and quadruple those numbers in the next couple of years. So we're going to jump into a little bit about the problem that we see within finance, especially within the micro financing space, and how Kiva presents a solution to that. We're also going to talk a little bit about our loan program and the borrower process so that you all are very familiar with what's next. We believe at Kiva that dreams are universal, okay? Opportunities are not, and we envision a financially inclusive world where all people hold the power to improve their lives. We know how powerful money is. A piece of the problem that we notice here at Kiva, that missing micro. So a lot of traditional lending organizations, right, they prefer to, one, lend larger loans, but also two, they prefer their borrowers to be a little bit more well-packaged when it comes to financials. So they typically want you to have established credit. I know because I've been there, right? I was that business banker who was submitting those business loans, having conversations with underwriters, trying to figure out why we can't get approved, right? They typically want you to have some type of collateral. If that's not a home, they at least want you to have some savings that can be put into an account as collateral. And a lot of times they want you to have audited business financials, in which we know that that's honestly a big challenge in our communities. A lot of times our books are not in order, and we saw that heavily when PPP came around. But also, too, when we think about those microloans, and typically, according to the SBA, microloans are anything under $50,000. It's expensive for larger lenders to actually lend microloans. So a lot of them don't prefer to, right? A lot of times you'll talk to financial institutions and they will present to you a minimum of what they will lend to you. Kiva comes in and we fill that gap for you. At Kiva, our loan sizes range anywhere from $1,000 to $15,000 at 0% interest. No, it is not a scam. It is real, okay? And we know that in this interest climate right now, 0% is crazy important. So listen, we want to make sure that you're taking advantage of that. Our loan terms range anywhere from 12 months to 36 months based on the size of your actual loan. And don't let me forget to mention, it's 0% interest, 0 fees, no collateral necessary, no audited business financials necessary, no minimum credit scores. It's perfect, right? I know, it's perfect. Kiva is super, super focused on serving that missing micro. So when we look at our Kiva loans, a lot of times our average loan is around $7,000, $6,000 to $7,000. When you look at these other lenders here, and most of these are non-traditional lenders, so we would call them like alternative lenders. Some are CDFIs, which are community development financial institutions, or just other alternative lenders in general. A lot of times their average loan is around $12,000 to $15,000, right? So sometimes for that borrower who literally might only need $1,000 or $5,000 to be able to fund inventory, right, to prepare for the holiday season, Kiva comes in and we fill that gap for you. I like to tell my clients often that Kiva is the first step of the capital ladder, okay? Yes, Kiva is absolutely a solution to your problem right now, but our well-educated clients, I try to tell them Kiva should not be your only stop forever. It's just the first stop. You want to be able to graduate into other lending organizations. We want you to become more lendable. So we encourage to continue to enhance, right, your financial well-being, building your ecosystem of support, making sure that you have some coaching, make sure that you have other lenders in your corner who can coach you to being lendable with their institutions, okay? Kiva is the start, but Kiva should not be your only alternative, your only answer forever, okay? At some point, we want you to be able to qualify with those CDFIs. At some point, we want you to be able to get that SBA loan. At some point, we want you to be able to walk into these large financial institutions and say, hey, I need a loan for X business, and they're able to say, yes, we would like to serve you. It's a process though, and I tell people that you have to be intentional every step of the way. You can't just get your Kiva loan and just say, I got it, and now that's it. No, because again, that is just the first step. It takes additional steps and intentionality to get to that next point. One reason why I love Kiva so much is because we are so intentional about connecting communities, right? And all these community members who serve entrepreneurs together around financial support. Even when you think about my role as the entrepreneurial ecosystem manager, literally every single day I'm spending time with our capital access managers and helping them to build out their ecosystems, not just to support themselves and their organizations, but to primarily support their borrowers. What organizations are you in relationship with? There are women's business centers, there are SCORE chapters, there are SBDC chapters, there are Operation Hope chapters, there are chambers, right? There are so many various organizations. You have economic development agencies within your city and local government. There are so many organizations out there where their mission is to support entrepreneurs. But as you all probably know, too often we're working in silos, right? It's really about bringing everyone together to be able to support our entrepreneurs, to build that ecosystem. And Kiva does that. So we work directly with those borrowers. We connect those borrowers to our community partners. We have national partnerships with organizations like Start Small, Think Big. We have partnerships with WAVE, right? We've worked with SCORE. We are providing those resources and also the encouragement to help bridge that gap. If you were like me, I grew up hearing the term that it takes a village to raise a child, but guess what? It also takes a village to build a business, right? To build a sustainable business. You cannot do it by yourself. I know often we struggle with trusting institutions. We struggle with trusting people, right? But guess what? We have to learn how to overcome that, especially within this economy. Another avenue in which we help to bridge partnerships is through our trustee program, in which I'm hoping that at some point we're going to bring Venture for Them in as a trustee. Our trustees are local community organizations that provide some type of technical assistance to borrowers. And when you come into our Kiva family as a trustee partner, you're able to work with those borrowers, help them with their applications, but you're also able to endorse their application. So when a borrower has an endorsement through a trustee, when you go on their Kiva profile to lend to them, you're able to see that trustee's endorsement, and you're able to see why that organization chose to endorse that particular borrower. A lot of times when we have endorsements, those borrowers, they get bumped to the top of the line, right? But also those borrowers also sometimes can qualify for a little bit more money. So it's so important that we're building our trustee network. And being a trustee is completely free. All we need is an organization to say, yes, we provide technical assistance, we support entrepreneurs, and we like to be a part of their funding journey. You complete an application, boom, you're now a part of our family, and you get to work with some amazing people like myself. Now let's get into the actual loan program, where we go from being a borrower to repaying back that loan to being able to grow our business. And I think one of the most amazing things about a Kiva loan is that once you repay your loan, you get to come back for another one. And you pay that back and you come back for another one again. And a lot of times when you are a repeat borrower, you can qualify for double for what you qualified for before. Let's get into some of the eligibility criteria. This is not everything, okay, but I'll make sure that we have the links for you all to see that this is just kind of that starting point where we want you to make sure that you cover the basics. So you have to at least be 18 years old, okay? I know sometimes when we're in school, We start school sometimes before we become 18, but we have to cross that threshold first. Once you have the 18th birthday, then let's come back and talk. You must be using the loan for business purposes, okay? This is not a loan to use for your personal affairs, right? For consumer use. This is not to pay your rent, right? This is not to pay for school. This is truly to pay for things within your business, okay? However, we do not process loans for debt consolidation, okay? This is truly to be able to infuse into your business for something else that's going to allow your business to grow and hopefully bring in more income. You and your business must be based in the United States. You also must not be engaged in any of the following activities. So multi-level marketing, your Vector, your Amway, those direct sales type of organizations, any other federally illegal activities. We do not support cannabis-based businesses. I know that is a big one right now, but because it's not federally legal, we can't do anything with it. You cannot currently be in an active foreclosure or an active bankruptcy, okay? It could have happened in the past and you've been discharged, dismissed, etc., but it cannot be active. You must also be willing to demonstrate your social capital by having a small number of your friends and family, community members make a loan to you. And I'll talk about that a little bit when we get into the private fundraising phase of your loan. Let's talk a little bit about some things that can help you increase, right, your eligibility for qualifying for more, but also those things that can become a hindrance to your application. Now, again, none of these things are like hard requirements, but these are things that can help you, right? When you have a low proportion of your monthly debt payments to your income, AKA your DTI. The lower your DTI, always the better. If you have high business revenues, that always creates a much stronger application. If you have strong credit, if you're able to provide any type of government business proof, if you're able to show us that you already separate your business and your personal finances. And when it comes to that, right, we want to make sure that we're not commingling in that business account and just having a business account just to say we have one. We actually want to make sure that your business account is taking care of your business expenses and income. Your personal accounts take care of your personal things. Even if your business is your primary source of income, you want to make sure that you're keeping up with all your business transactions and just pay yourself. Let it be a transfer, let it be Zelle. You can write yourself a check, whatever you want to do, but you want to actually transfer that money from your business to your personal account. We don't want to see on your statements, okay, that you're paying your rent from your business account. We don't want to see that you're getting your hair and your nails done from your business account or your haircut, fellas, okay? We want to make sure that we're keeping these things totally separate. If you have a strong business, social media profile, that always helps. If you're endorsed by a trustee, that's always a bonus. And if you're a repeat Kiva borrower, those things add value to your application. Again, these are not like non-negotiables, but I want to let you know how can you get more favor over your application. Now, of course, a couple of things that can hinder, the amount that you potentially qualify for is having a lot of past due debt, aka those collection items. You can have them, however, of course, we look at them and we have to take that into consideration when we are giving you your loan approval, okay? That can mean that you may qualify for less than what you initially intended to apply for. If you have a high DTI, that can also cause some challenges with your application, or if you have a weak credit score, that can cause some challenges. And when I say challenges, it's really about how much you get approved for, okay? Now with this, because these things are not non-negotiables, we're really big on transparency. We want you to be honest, okay? Some things that are immediate grounds for denial is if you tell us stories, okay? If you're lying about your past due collections, or if you're lying about missed payments on your credit report, or if you're giving us misinformation about what your credit score is, those things can cause immediate denials just because you were not transparent, okay? Yes, we're going to pull your credit. We're going to see it anyway. So be honest. That's a part of your story, okay? We're not here to judge you. We're still here to help you, but you got to be honest with yourself so that you can also be honest with us to really get the support that you need. Let's dig into the borrower process, okay? So there are about 4 phases to this thing. So initially, you're gonna submit your loan application. And the reason why we say that takes you anywhere from 30 minutes to an hour is because there are some components of your application that you actually wanna spend some time on. So one, you're gonna have to upload a high quality photo, right? You learned a little bit about crowdfunding before, so you know that with crowdfunding, you have a profile that's going to be on a website that's going to be accessible for other people to see. You want to always make sure that you're putting your best foot forward. So having a great photo, you have to tell your personal and your business story, right? Why are you raising funds? Why did you start your business? And this is a moment for you to get personal, really being able to master the art of storytelling. You are always a walking representation of yourself and your business. You are your brand, and we want you to be able to articulate that, okay? We do ask if you have them to turn in tax returns, bank statements, and these things are just to show us that you do have separate financials, etc. Granted, there are a list of other options, but those are just an example. Once you get through the application phase, it's fully submitted. We've gone back and forth to make sure that you have the best of the best within your application. Then we jump into the Kiva review phase, okay? Now, within the Kiva review phase, there are 2 various tracks. So the first track is if you are not in a hub market, which means if we don't have a local organization that's representing Kiva that covers your specific zip code, then you automatically go into our general market borrowers where our Kiva team takes care of your application. Now, if you're in a hub market, which means there is a hub nearby, we have a hub in DC that's housed out of DCLBD. We have a hub here in Baltimore. If you're in a hub market, the first part of your Kiva review is going to be CAM screening. So that capital access manager that's representing Kiva within those organizations, they get the first opportunity. I'm not sure who that is, but if you can mute yourself, that'll be awesome. They get the first opportunity to review your applications just to make sure that things are on the up and up, to confirm your documentation, to make sure that you feel comfortable with the rest of the process. And then that CAM will move it forward to Kiva review, where our underwriting team will take a look at your applications, the various components in it. We'll know if you've been endorsed by a trustee or not. We'll know if you're a repeat borrower or not, et cetera, if you have an online presence, all of these great things. Once you get through the Kiva review process, we're going to speak it into existence, right? Once we get that approval notice, they will tell you how much you qualify for, what your loan terms will be, and then you have the opportunity to accept. Once you accept, you choose when you want your private phase to start. So when it comes to fundraising, there are 2 various levels to that. The first level is that PFP is what we call it, private fundraising period. And this is where that social capital comes into play. You're going to receive a certain amount of people. It could be anywhere from 5 to 40, depending on the amount of your loan, that you will have to ask to support your business at a minimum of $25. Okay. Now, I know a lot of us, we grew up not feeling comfortable asking people for money, or for some of us, honestly, your family and friends are not your biggest supporters, so they might not be in the running to support you, right? But that doesn't mean that we do not need to extend our network and build that ecosystem so that we can bring those people together to rally for you. You have up to 15 days to get through the PFP phase. However, as soon as you reach your amount of people, you automatically go to public. So if you reach your PFP numbers within day 2 or day 3, you still automatically jump into public, okay? But we do allot up to 15 days for you to reach that number. And it's not about necessarily the amount of money you raise. Granted, we encourage you to try to get, as much as possible, anywhere from 30 to 40% of your loan. That way, once you go to public, it's not like you're starting from scratch, but it is about the amount of people versus the amount of money. Now, when we get into the public phase, this is where you get exposed to our over 2 million lenders in our network. I remember when I funded my loan, I had over 400 people contribute to that. And it was a lot of people I did not know from all various countries, all places around the world. But for you all, it's an amazing marketing opportunity, because now you have people that are exposed to your business who probably would have never seen or met you or engaged in your business. So I always say you want to put your best foot forward in crowdfunding opportunities, okay? There could be multiple wins in there for you. You have up to 30 days within the public phase to raise the rest of your loan, okay? One thing about it, I know it might not be everyone's favorite, but it is an all or nothing. So we do have to raise all of the money for it to be dispersed to you. If we don't fully reach our full amounts, then unfortunately we would have to start over at some point. It can be discouraging, but I always say if I can do it, you can do it too. Once you reach your loan target amount, then those funds are dispersed to you. We use PayPal for pretty much everything for your disbursements, repaying your loan back is through PayPal, etc. You will get your terms, right? I always encourage to set up your auto pay so that we don't run into any challenges with having late payments. Okay, we don't want to run into a delinquency situation and eventually turn it into a defaulted loan. Why, Lydnsae? Because one, you're trying to build trust with lenders. Okay, we're already the first step on that capital access ladder, and a lot of times you do well. Sometimes we can support you when it comes to that next loan, writing a letter of recommendation or being able to provide, some type of check for you when you're talking to other lenders if you do it well. When you don't, right? You're not just taking money from a financial institution who gets to write off their defaults, right? You're actually taking money from real people around you who contributed to your business. It's about the people in your community. So let's just say your friend network or your social network that supports your business. Sometimes your clients even help you to fund your loan. When you don't pay that loan back, you're not paying those people back. So that also can cause reputational damage. And you don't want that, right? It's already 0% interest. You want to make sure that you're putting yourself in position to pay your loans back. Payments do start 1 month after the loan. Okay, so that is something to definitely keep in mind. If you know that you're using the loan to purchase something or to produce something that will create income, make sure that you already have at least a couple of months of your payments on the side. Okay, that's super, super important for you. Now, when we think about the difference between Kiva and a lot of other crowdfunding platforms, first things first, we are a loan. We are not donation based. Okay, this is not a grant. Okay, this is not money that's just being given to you and you don't have to pay it back. You absolutely have to pay it back. But also, too, again, the phenomenal part is there are no fees associated with this. You literally only pay back what you borrow, okay? Our loans, again, are between $1,000 and $15,000. You do have to raise the full amount. There are some platforms where you don't have to raise the full amount. They'll give you, bits and pieces, but it's super, super important. And we have a 95% success rate. That is really, really huge. And we provide a lot of one-on-one support. If you want to edit your profile, if you want to upload a new picture, let's just say you get halfway through your raise and we're having a challenge raising your money. You just want to give your lenders a fresh photo. You want to add to your story. You have the opportunity to do that. We also connect you with resources. Once you're in our Kiva family, you are locked in, okay? We send out emails to our borrowers to share with you, our network partners, what's happening, workshops, webinars, etc., for you to take advantage of to consistently grow and build your business ecosystem, which is super, super, super important. We also give you some pre-made campaign tools that you can use when you are in the lending phase. You have share buttons where you can share it across your social media. We'll give you templates on how to speak to people. And you also, within your platform, you'll have an opportunity to actually update your lenders and tell them what's happening within your business and how they can support you, okay? This is just a quick glance. I'm not going to stay here long, but this is just if you chose a loan amount that's within one of these tiers and you see about how many people that you would have to reach within the private fundraising period, and then you'll also see the term associated with that. I mentioned some of these earlier, but just a few other businesses that we do not lend to right now: lethal weapon businesses, so gun shops, bullet makers, any type of adult entertainment, tobacco-based businesses. If you're a contract worker, like through Lyft, Uber, Airbnb, DoorDash, etc., we do not lend to those. Direct sellers, Mary Kay, Avon, etc. This is a few examples of what you can submit for your business proof through verification. So your incorporation documents, government registration, permits, your DBA documents, tax returns, your EIN numbers, or if you have an endorsement from a trustee, and they're able to also provide business proof for you. Some potential ways that you can use your loan, right? Buying equipment, hiring an employee, working capital, upgrading your space, anything that definitely helps you to advance your business. Okay. I've already kind of given you all of this information about the loan process in advance because I'm thorough like that, but I want to make sure that you all get a glimpse of that. Once you are on our site, people will see how much you have raised, how many days you have left, and they'll be able to see how many people have already powered your loan, which is great. They get to learn about your business, and below where you see this kind of intro where it says a loan of $10,000, it'll be below that on our page where they'll actually get to see your full loan story, which is super, super awesome. Once you get funded, boom, it lets everybody know who goes to that link that you have been fully funded. Okay. One thing I like to say too, if you're ever behind in your payments, if you're delinquent, if your loan eventually defaults, guess what? So when they go to that link, they'll be able to see that too. Okay. So it's super, super important that you are making your payments and making them on time. Okay. A couple of best practices from some successful Kiva borrowers. We want you to be tech willing, right? I know with this particular group, technology is not an issue, okay? But you have to be tech willing because we do everything on the computer. We're fintech, right? So you have to learn how to navigate your email, PayPal, and Kiva's online platform. We want you to definitely be able to be impacted by this small loan amount, right? How can this change your life? How can this change your business's trajectory? We want to make sure that you have a good picture, make sure that you have a great loan statement. We will really, I've mentioned it several times, we really love when our borrowers work with the trustee team because that trustee team can really provide that one-on-one support, making sure that you have a strong network of supporters. I say you want to, honestly, if you know that you're interested in a Kiva loan, I would say start just writing down in your free time, writing down people that you know you would want to reach out to during that PFP phase, so you're already coming and you're ready in advance. And we want you to also be willing to climb the capital ladder, okay? Again, we do not want Kiva to be your only option forever. We want this to be the start for you. I will make sure that you have all of these links if you're interested in applying, but also just so that you can learn more about Kiva from our website. Thank you so much.
This was amazing, Lydnsae. I am so excited about digging a little bit more into the whole Kiva ecosystem. I mean, everybody knows my story. So I do tons of this kind of work around the country, and I speak with banks and the big guys all the time. And you're right. I tell them all, like, you guys, your average loan size is like $150,000. Like the guy that's just getting started, or the girl that's just getting started, all they need is $4 or $5 grand to, hire their first employee, beef up their marketing effort, get some more inventory. Like, where's the loan product for them? And they don't have one, and it's non-dilutive. This is loan stuff, so you don't have to go give half your company away to somebody to get $2 grand, and so like I really, really, really like this as an option. And so how long have you guys been around, first and foremost? Because, these kind of products, this is a newer type of thing, you know what I mean? Like products specifically for early stage companies. I mean, that landscape is growing, but it's newer, like within the last 15, 20 years.
So our organization started in 2005,
Okay.
but specifically here in the United States, this particular product started in 2011.
That's about right. Yeah, that's when they started to think like, okay, Bank of America is not serving the small guy,
Right.
Yeah. All right, so my question is, and I know Keontae may want to jump in, and if you all have questions, please throw them in the chat. Do a little hand raise, whatever you need to do. Let's get some questions in here because Lydnsae was just dropping some gems. Like this Kiva thing is a big deal for early stage entrepreneurs. All right, can you tell us a couple of stories, maybe one or two, of like actual people who have used Kiva? Maybe a case study like what their business was, how they used it, how it took them to the next level, how they help, just like make it real for us, because like you talked about all of the Kiva and all of the stuff, but like bring it down to like a real business that we can put our hands on that looks like what we do day in and day out.
a real case scenario, and I'm going to give you a kind of a aha moment to just learn how small the world is, but I'm also going to give you some real tangible from what I have personally experienced here in Baltimore. I'm also a certified SCORE mentor, and recently I was assigned a mentee to coach her through the pitch competition process, and she came in second place, by the way, last night, so super excited about that. Nice. But during this moment when I was meeting her and learning more about her business, which is called the Learning Habitat, she creates educational environments for students who are particularly homeschooled. I learned that she was a Kiva loan recipient, and she was very excited. And she said something that was very profound. And at this point, she's almost in January, she'll be 2 years in business. She's already reached $500,000 in revenue. She already has 2 locations. And this business is located in Charlotte specifically. She said, Lydnsae, Kiva believed in me when all I had was a dream and a logo.
Wow.
That right there was game changing for me. And this was somebody that I was not directly a part of her Kiva journey, which was even more special for us, right? But I have several borrowers. One of my borrowers specifically that I can think about, her name is Mia of Ruth's Lavender, and she started her business while she was experiencing homelessness. Her business creates hair care and beauty products in honor of her grandmother, who used to make these products in her home. But of course, a lot of times our parents and grandparents, they didn't really have the courage to think that they was worth starting their own business. They didn't have the resources. She started that business, and now this young lady, so I met her when I was, before I got to Kiva, but I was coaching her because she was one of those borrowers who was a little late. But again, being able to, I lead with empathy and everything. I'm sure you all can probably see that, but being able to get to know her, understand her vision, understand her business, we have been able to actually get her business up and running. She's been a part of multiple accelerators now. Right now, she's currently in the running to win a brick and mortar location with free rent for a year, right? Which is super crazy. Here in Baltimore. So our loans really change lives because we are targeting entrepreneurs who don't have the typical resources, right? I know if you're like me, I'm not a trust fund baby, right? So I did not come from, a background of being extremely wealthy, right? My parents do well now, but when I was coming up, that was not the case. And that's the case for a lot of our borrowers. For a lot of our borrowers, their families, their friends don't support them, right? They're the first entrepreneurs in their families. I have so many stories. I have restaurant owners that I have literally been a part of their journey where they just needed to use Kiva for a piece of equipment, right? Now they have Thrive and brick and mortars that you can walk into and patronize every single day. We do this work and we're truly about it. And for us, as you can see, it's not about the revenues, because when you think about lenders, right, when they're lending to you, a lot of times they make their money by what? Those origination fees and interest, right? We don't have any of that for you. So to our borrowers, it's the least costly loan option that you're probably ever going to run into. And again, like you mentioned earlier, you're not giving away any equity to do that.
That is amazing. That is amazing. Like, that is real impact. That's what Founder Fridays is all about. Like, this is what like this kind of product is perfect for the entrepreneurs that come in and out of Founder Fridays. So anybody, come on, the ecosystem got to have some questions. Keontae, I know you got something.
I don't want to. Anybody else, feel free to hop in the chat too, but I got something real quick though. First, Lydnsae, I appreciate you. This was super informative. Like, I'm seeing that 0% interest, and I'm like, hold up, like in this economy, like what y'all got going on over there? So first of all, super big deal. I love it. I love the streamlining of the process. Everything seems so easily accessible. I love how y'all are so community based, right? Like, that's a big deal that y'all have coaches and different like campaign templates to assist people along the way. A lot of platforms, they're just like, all right, here's the platform. You get through the application process. Now go figure it out. And so I love that foundation of community that y'all have. That's a really big deal. I do want to plug in some of our awesome HBCU innovators on HBCU student entrepreneurs, alumni entrepreneurs. I saw some North Carolina Central in the chat. I saw some North Carolina A&T, some Bowie, some Morgan. And so I know that y'all are working on a really dope HBCU initiative through Kiva. And so I wanted to get a little more information on, like, is that any different from the traditional track that Kiva has? And like, are you guys maybe going to have like a on-campus presence? Or like, how would that look for some HBCU students and entrepreneurs who want to get started with it?
See, y'all, he done put me on the spot with something.
Oh, my bad.
But no, it's
People want to know.
the people want to know, right? And I'll see if I can surface a website too. So at Kiva, we have Kiva University partnerships. Unfortunately, right now we don't have any with HBCUs. So most of our university partnerships are in California. So UCLA, UC Berkeley. We're working on the USC chapter, Mercer, and Northeastern University. But these chapters are HBCU students or just students in general, right, who are looking to support entrepreneurs. So some of our chapters, we have students who are volunteering to support these entrepreneurs. I was just talking to one of my capital access managers yesterday, and the college students in her area, the accounting students, they're able to provide financial support to these entrepreneurs, helping to reconcile their books, making sure that they have their paperwork in order. We also have youth clubs that are within high school that's teaching students about microfinance early, okay? And it is a part of my mission. It is recorded today to make sure that we have those types of programs at our institutions, okay? I am joined here by my awesome intern, Ms. Sonia Patel, who is working very diligently with me to create this initiative. Listen, I'm crossing my fingers to have something by the spring, and in partnership with you, Keontae, and all of the HBCUs that you represent. I know that it can be possible to make sure our students get access to this information early, but to also allow them the space and room to impact these businesses who a lot of times honestly can't afford to hire full-time personnel, or sometimes can't afford to hire contractors. So this could present, internship opportunities for our students, but most importantly, teaching them about finance and capital and how to build business using OPM, right? We love other people's money around
here. Yep, big facts. No, I love it. So that's why I wanted to pin that, because I know it's going to come to fruition. Your passion is there. You're doing your thing. And so I wanted to plug in our founders online to keep their eye out for that. Because when y'all do launch that initiative, they need to tap in ASAP, and so that's a big deal. Definitely appreciate y'all.
Thank you. No, thank you for asking. And if I don't find it, our Kiva Youth Club's link right away while we're still on, I'm gonna make sure that I send that to you to send to them in their recap so they can learn a little bit about what we're already doing, so that you all have a visual of what we're looking to do with our HBCUs.
Okay, sweet. I love it. And actually a cool quick pinpoint. My first conversation with Lydnsae, before we even got into intros, we talked like for the first 15 minutes just about our HBCUs in general. Before we got to Founder Fridays, Kiva, all of that. We just talked about bonding over the joys of it and the stressors of it too. But most importantly, at the root of it, like, how can we make an impact? How can we make a change? And so that's really important just for everybody on just how Lydnsae is representing Howard, and she's championing it forward, and she's championed to create initiatives for HBCUs. Like, we have to keep that same energy to help bridge the gap. And so we were chatting for a good 15 before we even got into intros. And so, that passion is there, and we appreciate you. Like, this is a huge movement that y'all are, doing. Even though Kiva's been around for some time, just having this young, fresh HBCU leadership in there is awesome for the organization, 100%. So definitely appreciate you. They want to see if anybody else had any other questions in the chat. Anything that you have to get off your chest?
While we waiting, if we may or may not, because we wrapping up. This is so my question, maybe you could talk a second about it, is like, what's on the horizon for Kiva? Like, what do you guys see as sort of the next iteration of this whole idea of making capital accessible to communities that generally are locked out of this conversation? So how far are you guys trying to go? What do you guys see the trends going? Like, what's next for Kiva?
Great question. So we have new leadership. So our CEO has been with the organization for almost a year now. And he's coming in with some very fresh eyes to definitely expand the work that we're doing, specifically here within the Kiva US program. And before I jump into that, Sonia just dropped in our introduction to our student partnership, Students for Social Impact with Kiva US. Make sure you all open that document and download it, because you are the first to hear it, okay, from an HBCU perspective. But one thing thing that we are very passionate about is being able to create more national partnerships where we can provide more support to our entrepreneurs. So with me being a certified SCORE mentor, something that's on my agenda is creating a national alliance with SCORE so that they can directly support our borrowers. Another organization that I'm looking to really create a national partnership with is Operation Hope. If you all are not familiar with Operation Hope, you need to be familiar, okay? Operation Hope is more so for the people, SCORE is for everybody. And even within SCORE, just trying to shift the narrative of what our mentors look like, because a lot of our mentors in SCORE typically old white men, right, who are retired and seasoned, but a lot of times they are unrelatable to our businesses. So being able to infiltrate that space and to bring more of us into those communities, but also being able to bring the us that we create there into Kiva to support our borrowers, because we know our borrowers need just a different type of support, right? But also too, we're super excited, and we literally just got cleared maybe yesterday to say this, but we just secured a huge partnership with Capital One. They awarded specifically the Kiva US program with a $3.5 million grant. $2.5 million of that will directly go to support Black and Latino businesses. So we're super excited about that. And that will happen through our managed lending programs, through one-on-one, or through our matching. So let's just say, for example, with Capital One, they give us a certain amount of money, and this could be any partner, right? Because we're a nonprofit, we are always looking for sponsorship dollars, philanthropic dollars. When these organizations fund us, we are able to use that money to help accelerate the funding for those specific borrowers within our platform. So one part of the 2.5 million will be used for matching dollars. So what does that mean? Any Black or Latino business that gets posted within our site or within the geographic areas that they select, whenever someone lends to them, there is a match that also happens for them. So we can do a 1-to-1 match. We can do a 1-to-2 match. So if somebody lends $25, another $25 is coming from our matching fund, or, depending on what the ratios are. And this partnership is very new, literally just got announced yesterday. So there's still a lot of information that's forthcoming, but we are being intentional about serving the communities that need us the most, those communities who look like us. And I am a huge, huge advocate for making sure that these things happen. Another thing that we are looking to do is to increase our level of auto lending. So we have a number of lenders that are within our platform where they have a certain amount of money within their dashboard that literally just goes out and lends to loan on a regular basis. As they're being paid back, it literally just goes out into other loans. So a part of that 2.5 million will also go to the auto lending pool, where these funds continuously just gets relent and relent and relent. So we're super excited to bring more Black and brown entrepreneurs into our pipeline, to making sure that we get the money ultimately that we deserve, right? But we have some great inventions, we have some amazing businesses, and a lot of times we're literally just missing the support to go along with that, and that's what we're trying to do.
That is amazing. That is amazing, man. Like, I am so excited about this whole Kiva product, and we're gonna talk more about it offline. But I think there's tons of partnerships. My mind is going crazy. Keontae already know I got a million things I'm thinking about how we can do some stuff together. So, man, this is Founder Fridays, y'all. As you can see, this is what it's all about: access to knowledge, network, and capital. We've been saying it. We've been screaming it from the rafters. Like, this is what it's all about. I had never heard of Kiva before. And then, when we, got, of course, the opportunity to get Lydnsae on the show today, I was like, this is amazing. Yeah. This is amazing, because this is just the kind of resource that, a lot of Black and brown entrepreneurs just don't know about, and like, Lydnsae was saying, and we talk about all the time, we got great businesses that just need a little help. $5,000 can make all the difference in the world to an early stage company that's trying to go to the next level. So anyway, Founder Fridays, y'all. We are here every Friday. Tell a friend. Follow us on social media, Venture for Them. Of course, I'm Think PGC, but you can follow us at HBCU Biz. Lydnsae, how can they follow you?
Listen, follow me on Instagram at My Wealth Connector. My job is to connect you to all the resources that you need to build a sustainable business. You can also connect with me on LinkedIn. Someone already dropped the link here for you in the chat. Please, also, if you need anything, shoot me an email. My email is lyndsaep@kiva.org.
All right. 6 o'clock, y'all. That's Founder Fridays. We'll see y'all next week. Have a great, great, great weekend. Go out and be great. Go out and smash those businesses this weekend. We going into Thanksgiving, Black Friday. Y'all got to go make some money out here with these businesses.
Yeah.
And
small business Saturday with
yes,
that.
small business. Yes, there you go.
Mm-hmm.
And get your Kiva loan in there too.
Right, go talking now.
That's it. All right.
Lyndsae, we appreciate you 100%.
Thank you so much, Lyndsae. This has been incredible.
Have a good one, y'all. Have a great weekend.
Good night, everyone.
Good night.
Thank you, everyone.